welcome back to Global Value. In today's video, we're going to be taking a look at American Eagle Outfitters, ticker symbol AEO. At the time of recording this video, American Eagle is trading for about $11.50 per share. Year to date, they've had a rough 2022 so far. They're down 55%. Over the past year, they're down 70%. Going back 5 years, they're about flat. Over 10 years, they're down 5% compounded annually. And over 17 and a half years, they're down about 30%. So this stock has been very cyclical and it has not performed well compared to the overall market. So American Eagle is pretty close to its 52-week low. There's been a lot of bad news about the company recently in the press between distribution challenges and then a buildup of inventories, which is something that's not uncommon to the overall retail industry right now. American Eagle has 21% of their shares outstanding currently sold short, and the company is about a $1.9 billion business. So for some background about the business, American Eagle Outfitters is an apparel and accessory retailer with company stores in the United States, Canada, Mexico, and Hong Kong. The company leases all store premises, regional distribution facilities, some of its office space, and certain information technology and office equipment. American Eagle also has an online business that ships worldwide. It operates in two segments, American Eagle and Aerie. The majority of its revenue comes from its primary brand, American Eagle, which offers an assortment of specialty apparel and accessories for women and men. Geographically, it generates the vast majority of its revenue from the United States. As of January of this year, the company operated 880 American Eagle stores, 244 Aerie brand standalone stores, and 5 Todd Snyder stores, again, in the United States, Canada, Mexico, and Hong Kong. American Eagle Outfitters, Inc. was founded in 1977 and is headquartered in Pittsburgh, Pennsylvania. For our fundamental analysis, we'll be performing a modified version of the 8-pillar analysis originally popularized by Everything Money, taking a look at 8 key different financial metrics of the business to get a holistic and beginning understanding of the business based on its financials. Starting off with pillar number 1, we want American Eagle's average 5-year PE to be below 22.5. So because they're clothing and because they're retail, American Eagle got hit very hard during the pandemic. They had negative earnings for well over a year. Since then, their earnings multiple has bounced back. It's still a little under what it is historically. Right now, they're trading at just over 6.5 times earnings. And over this 5-year period, they traded an average of 8.5 times earnings. So that is going to be a check to start off on pillar number 1. Pillar number 2, we want their average 5-year return on capital to be above 9%. Over the long run, over the course of decades, the return that you're likely to get on a stock is going to be approximately the return that the underlying business generates. This return on capital are those business returns. This is a tautology, but American Eagle, when they're doing well, earns above average returns on capital. They were very steady, earning 26.5% returns on capital in 2018 and 2019. However, the business was trending down going into the pandemic, and they were significantly affected by the pandemic. They're reporting on a fiscal year for basically the end of January, the beginning of February. Their results from 2020 and when the pandemic hit are really reflected in what's listed as 2021 here. Their return on capital was pretty much non-existent over the pandemic, but then they did bounce back in 2021. Even with being hit hard by the pandemic and this non-existent return in 2020, American Eagle averaged about 17% return on capital over this time frame, so that's still going to be a check on pillar number 2. Pillar number 3, we're looking for 5-year revenue growth. American Eagle has grown revenues from $3.8 billion in 2017 to about $5 billion in 2021. So that's another check. So far, we're 3 for 3 to start off. Pillar number 4, we're looking for 5-year net income growth. Again, despite having significant losses during 2020, American Eagle has been able to grow their net income. Over this time period, they've actually doubled net income. So that's a good sign here, and that's going to be another check on pillar number 4. Pillar number 5, we're looking for decreasing shares outstanding. When you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. When a business issues new shares and dilutes existing shareholders, they're decreasing your percentage of the business's profits that you're ultimately entitled to. The opposite happens when a business buys back shares. American Eagle was buying back shares even throughout 2020. However, from 2021 until now, American Eagle has diluted existing shareholders by more than 24%. So that's going to be an X here. This can be a silent killer for investors and is really something you want to pay attention to. You're going to want to learn exactly why American Eagle Outfitters was issuing these new shares. So that's our first X on pillar number 5. Pillar number 6, we're looking for 5-year free cash flow growth. Free cash flow is cash from operations minus capital expenditures. It's this column here in green. Free cash flow is the lifeblood of any business, and a business's ability to produce free cash flows is ultimately how the business should be valued. Free cash flow can be used to reinvest in the business, make acquisitions, buy back shares, pay dividends, or pay down debt. Over this time frame, American Eagle has seen their cash flows decrease. Unfortunately, both their cash from operations has decreased and their capital expenditures have increased, so that's not a great sign here. That's going to be an X on pillar number 6. In an average year over this time frame, American Eagle is producing about $170 million of free cash flow. So we'll use that in pillars 7 and 8 when we're evaluating how the business utilizes leverage, and then how the business's market cap compares to its abilities to produce free cash flows. Pillar number 7, we want American Eagle's net debt, which is their long and short-term liabilities minus cash and short-term cash equivalents, to be below their average 5-year free cash flow multiplied by 5. So at the beginning of this year, American Eagle had nearly $1.4 billion of net debt, so $1.4 billion of liabilities left over after subtracting their cash. When we multiply their average 5-year free cash flow of $170 million times 5, that only brings us to $850 million. So that's going to be an X on pillar number 7. American Eagle is utilizing more debt in their business than we're comfortable with. Finally, pillar number 8, the big pillar of them all, we want American Eagle's market cap to be below their average 5-year free cash flow multiplied by 20 to give us a reasonable starting valuation for the business. So American Eagle has a $1.9 billion market cap. When we multiply their average 5-year free cash flow of $170 million a year times 20, that brings us to $3.4 billion. So that is going to be a big check on pillar number 8. However, we don't want to look at just one pillar in isolation. We want to take in this analysis holistically. So pillar number 8, although it's a big check, doesn't necessarily paint a realistic picture here. What's more realistic because of American Eagle's high debt loads would be looking at how that compares to their enterprise value. Enterprise value takes into account the liabilities of a business and reflects what it would be like if you purchase the business in its entirety. With all of their debts included, American Eagle's enterprise value is about $3.6 billion. That's actually above what that valuation would be based on their cash flows. The other thing to consider here is the historical multiple for American Eagle. We've seen that relative to their earnings over the past 5 years, they've traded at about 8.5 times earnings. That's less than half of that 20 times free cash flow multiple. It pays to do further due diligence, how the stock has historically been priced, and then again, consider the analysis in its entirety. Lastly, American Eagle pays out a dividend, and so we're looking at the overall health of their dividend profile. Investors make mistakes all the time by blindly chasing dividend yield. It's important to look at a business's ability to sustainably support their dividend and potential dividend growth now and into the future. We want dividends to be supported by a business's cash flows. And so in 4 out of these 5 years, their dividend was. However, over the past year, they actually paid out more dividends per share than they brought in cash flows. And so that is a bad sign here, especially because they hiked up their dividends quite a bit from 2020. Coupled with the facts that they're issuing shares and they took on more debt than their free cash flows can support. In my opinion, this is a poor choice of capital allocation relative to the overall financial strength of the business. So in summary, American Eagle checks the box on 5 out of 8 pillars. They've had recent buildups of inventory and a lot of distribution issues. Even though they check the box on 5 out of 8 pillars, looking at this business really highlights the importance of understanding a business holistically and not taking one aspect of the business in isolation. This type of analysis is just a starting point to understand if it's worth your while to do further due diligence and learn more about the business. It's not any sort of financial recommendation to go out and buy the business or to sell it short. While American Eagle does earn nice returns on capital and it looks like it is trading below its historic multiples, its abilities to produce free cash flows have decreased and they don't quite match up with management's capital allocation decisions or the ability to pay off all of the debt that the business has incurred. We saw good growth with their revenues and their net income, but getting into some of the later pillars, we saw signs of some pretty poor capital allocation, and the cherry on top came from looking at their dividend profile. So with that said, that's it for today's fundamental stock analysis of American Eagle Outfitters, ticker symbol AEO. If you enjoyed the video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about American Eagle with me, and have a great day.